Yes, a very good morning to all of you. Right, so all of you there. Okay, right. So, which standard are we discussing? Yes, anything that you remember, that which is the standard, which is work in progress, which is WIP, not yet become the finished goods. Right, it is the SAE. Right, is it an SAE? Right, the standard on assurance engagement. Yes, SAE 34. Which one? Right, SAE 3420, right, which is regarding the pro forma financial information. Okay, right, anyways, but we are on our journey of the special standards, right? So in these special standards, we've completed with the SA 800, 805 and the 810, which is special purpose framework, single financial statement, specific element, account or item, and then the summary financial statements. Okay, right, then after that we came to the SRE, the standards on review engagement, right? SRE 2400 and 2410, right? 2400, the engagements to review the historical financial statements, and 2410, review of the interim financial information performed by the independent auditor of the entity, right? So when auditor is doing the review of the interim financial information, then SRE 2410. But a person who is not the auditor, if he is doing the review of the historical financial statements, then 2400, right? So in 2400, we said that we call him as the practitioner, right? And in 2410, we need to call him as the auditor, right? Which are the two procedures which are mainly to be applied for a review engagement? Can I obtain some confirmations? Can I, do some recalculations in a review engagement? Right? What are the procedures which are mainly performed in a review engagement? It is mainly the inquiry, correct, and the other one, right, the AP, that is the analytical procedures, right? So analytical procedures, if required, you may perform the additional procedures to address specific circumstances, other procedures if necessary. But yes, you might do inspection, observation, confirmation, and those. Yes, but it says main procedures are the inquiry and the analytical procedures. Okay, next one, right? All fingers on the keyboard. Right, all fingers on the keyboard. Okay, tell me, what type of an assurance do we give in case of a review engagement? Yes, by now it should be type 10, sent. Right, what type of an assurance do we give in case of a review engagement? We give the limited assurance. Limited assurance is to be given in the form of a negative assurance. So what do we say? Nothing has come to our attention that causes us to believe that the accompanying financial statements do not give a true and fair view, or they are not prepared in accordance with the AFRF. And we very specifically write down in our review report, a review is substantially less in scope as compared to an audit, right? Audit procedures are not being performed and an audit opinion is not being expressed, right? So, and then we saw that review is nothing but a mini version of an audit, right? So here also we check for going concern, material uncertainty, then we also modify our opinion. We also, instead of opinion, we modify our conclusion, qualified adverse disclaimer, right? Then we also check for subsequent events. We also need to check for fraud, allegations of fraud, non-compliance with the laws and regulation, right? So even that, right, what we check in an audit is also checked in a review, but at a lower level, right, at less in detail. And if the auditor is doing the review, so when you're doing the review, that time itself, can you perform the audit procedures also? Yes, it says that time itself you can also do the audit procedures over there, right? You can read the prior period financial information, the recent interim financial information, right? Then consider the significant risk, consider the materiality, consider the results of audit, internal audit, and so. Right, so that was our discussion about the 2400 and the 2410. Right, and in case if you think that, oh, you are not able to, you want to modify your conclusion, or you are not getting certain evidence from the management, right, you are not able to obtain the evidence, or there is a material adjustment which is required, it says to three things. One, yes, that was the question in the question bank also. One, you modify your conclusion. Second, you withdraw from the engagement. And third, consider the possibility of resigning from the entire audit engagement also. Because in 2410, it is the auditor who is doing the review. So one, you may consider to modify. Second, you may decide to withdraw from the engagement, that is the review engagement. And third, you may also consider the possibility of resigning from the entire audit engagement also. Right, and then that was our discussion regarding the SRE. Then after that we came to the SAE, that is the standards on assurance engagement, which is other than audit or review. Right, so this is also assurance engagement, but it is other than audit or review. Right, what did we say? Audit or review is done for the historical financial information. We say we have audited, we have reviewed. Right, whereas now in SAE 3400 we say we have examined, right? So here we issue the examination report. So what is the title of SAE 3400? The examination of prospective financial information. And prospective financial information is based on the, you have to prepare 2030, 2050. So prospective financial information is based on the assumptions. And what I need to check, whether the assumptions, are they the best estimate assumptions or are they the hypothetical assumption? If it is the best estimate assumption, then it would be, if information is prepared based on best estimate assumption, then it is called as a projection, right? If prospective financial information is prepared based on the best estimate assumptions, then it is called as a forecast. Yes, it's not called as a projection, it's called as a forecast. And if the prospective financial information is prepared on a combination of the best estimate and the hypothetical assumption, the what if scenarios, right, then it is called as a projection. Right, then in that case it is called as a projection. Okay, right, so forecast, right, it is best estimate assumptions, and projection, it is the best estimate and hypothetical assumptions. For forecast, yes, the best estimate assumptions, what we need to check, whether these best estimate assumptions, are they reasonable. And again, for that we give a moderate assurance in the form of a negative assurance. Nothing has come to our attention that causes us to believe that the assumptions do not provide a reasonable basis. That means what? The assumptions do provide a reasonable basis. Right, so nothing has come, NN. And then second part, what does it say? That the prospective financial information has been properly prepared based on the assumption. So NN and PP. Right, what is PP? That it is properly prepared based on the assumptions. Okay, and hypothetical assumptions, obviously they can't be reasonable. You don't know whether they are reasonable or not. So at least they should be consistent with the purpose why the prospective financial information is being prepared. Right, so for best estimate assumptions, we check whether they are reasonable. Okay, sales price increasing from 1,20,000 to 1,50,000, reasonable. But from 1,20,000 to 7 lakh, we say this assumption itself is not reasonable. Right, so whether best estimate assumptions, are they reasonable, and hypothetical assumptions, are they consistent with the purpose of the information. Right, so here you have to follow the examination procedures. Right, you have to check whether the assumptions, whether they are, clearly realistic. And if you find that, oh no, what assumptions they are making are clearly unrealistic, like we will become a 10,000 crore company this year, your turnover is 1 crore, then it says CA, you should not accept the engagement, auditor. And in case if you've already accepted, then you should consider withdrawing from the engagement. Or you think they are not correct for the intended purposes, right? The intended purpose is not right, right? Then you may not accept this engagement. So what you need to consider, the period covered. Okay, for what period? 5 year, 2 year, 3 year, 10 year. It should not be like for 100 years they are preparing the prospective, right? So the period covered, then the intended users, then also the information, is it for general or for limited distribution, then the nature of assumptions, and then also the elements to be included in the information, right? So these are the factors to be considered while accepting the engagement. Then after you decided, okay, I will do this engagement, now next what you need to do, you need to perform the examination procedures. And examination procedures, first procedure is what? KOC. right? Knowledge of the client's business, right? Without that, we cannot do any engagement. So first requirement is the knowledge of the client's business. Then you need to check the management's competence in preparing the prospective financial information, and also the engagement team's experience in doing the examination of the prospective financial information, right? Then you also need to check that how much is the prospective financial information affected by the management's judgment. Right? Then you also need to check the sources, right, from which the assumptions have been made, whether they are within the organization or it could be some sources outside, like, some industry manuals, some trade publications or so. Right? Then you also need to check the LMM, what is the likelihood of the material misstatement in the prospective financial information. And last important point over there is the stability of the entity's business, right? The stability. Right, so this is a very important question in SAE 3400, which is regarding the examination procedures. Right, then it says now CA, before you have to report, you have to check the presentation and disclosure of this prospective financial information. So in that presentation disclosure, number one thing which you need to check is that this prospective financial information is informative and it is not misleading. Right? It should be informative and it should not be misleading. Second, what does it say? All the accounting policy should be disclosed. All change in accounting policy should be disclosed. All assumptions should be disclosed. Any uncertainty should be disclosed. The date on which the prospective financial information has been prepared should be disclosed. And the basis of establishing the points in a range, that also should be indicated. Right? So this all you need to check in the presentation and disclosure. And then we come to the contents of the report, right? So we have title, addressee, introduction, management's responsibility, auditor's responsibility to perform the engagement in accordance with SAE 3400, right? Then NN and PP. Okay, nothing has come to our attention that causes us to believe that the assumptions do not provide a reasonable basis. And second, PP, that it is properly prepared based on the assumptions. And what do we say? Okay, we do not vouch for the accuracy of the same. Right? We are those saying giving a moderate assurance. Are we vouching for the accuracy of the same? No. Why we are not vouching for the accuracy? Because otherwise 312 will catch us. And we'll be guilty of professional misconduct under clause 3 of part 1 of the second schedule to the Chartered Accountants Act. Okay. And then you have the signature, place and date. Right. So that completed our discussion on the SAE 3400, the examination of the prospective financial information. Right. So we saw historical financial information, then prospective financial information, and then we came to one more type of financial information, which was the pro forma financial information. Right. So now you tell me what you remember, or what, image or impression do you have in your mind regarding the term pro forma financial information? Yes, pro forma. You can give me some offbeat example. You can give me the example which we discussed in the class, right? Something. Okay, what do you remember when you listen to this term, or what do you interpret it as? Okay, pro forma financial information. Right, the pro forma financial information. Yes, what does it mean? Okay, DRHP. Okay, it's to be included in the prospectus. Very good. Okay, so it is just as in the prospectus, there could be the summary financial statements, the condensed financial statements. There could also be this pro forma financial information. So what does it reflect? What does this pro forma? I told you, pro forma invoice, which is there in consignment, which is like just like invoice. And pro forma means just like. And so what does it say? Yeah, the unadjusted information, historical financial information plus the pro forma adjustment is equal to the pro forma financial information, right? So you have the, say, 2018, I've shown you those, pro forma financial information, right? Then say some acquisition of 2 companies happened in 2022. But had the acquisition happened in 2018, how the financial position would have looked like in 19, 20, 21? Say example for 3 years. That is where you prepare your pro forma financial information. Right? A significant event or transaction has actually taken place at a later date, but as if it had taken place. How would your financial information look like had the transaction taken place at an earlier date, right? Selected for the purpose of the presentation. That is what you mean by the pro forma financial information. Right? So you acquired the company on 1st October, but had you acquired it on 31st of March, how would your financial information look like? That is the pro forma financial information, right? And whose responsibility to prepare the pro forma financial information? Only intelligent students can give the correct answer. Others will give the wrong answer. Whose responsibility to prepare the pro forma financial information? Right? Only the intelligent students will be able to give the correct answer to this question. Yes, who is responsible? Exactly. Yes, exactly. It is the responsible party. Why? Because here we refer to the management as the responsible party. Right? So it is the responsible party's responsibility to prepare the pro forma financial information. Okay, right. And then when the pro forma financial information is to be prepared, like I told you, for preparation of historical financial information, accounting policies are required. For preparation of summary financial statements, applied criteria is required. Likewise, for preparation of pro forma financial information, what is required? For preparation of pro forma financial information, what is required is the, yes, you know it? What is required is the, exactly, the applicable criteria. Right? The applicable criteria. What is the applicable criteria? The significant event or transaction which has taken place at a later date, but had it been taken place at the date selected for the purpose of the presentation. Okay, right? Again, what type of an assurance is given by the CA in this type of an engagement? Reasonable assurance, right? So this is a reasonable assurance. 3400 was a moderate assurance engagement, right? Negative. But here, what does it say? 3420, you have to give the reasonable assurance. Okay, so what is the title of SAE 3420? The assurance engagement to report on the compilation of the pro forma financial information included in the prospectus. Do you know the name? Yes, everybody say the name with me. Assurance engagement to report on the compilation of the pro forma financial information included in the prospectus. Right? That is the pro forma financial information. So you have to report whether the pro forma financial information has been compiled in all material respects in accordance with the applicable criteria. Right? Whether it has been compiled in accordance with the applicable criteria. So what we need to check? Unadjusted financial information, pro forma adjustment, and then the pro forma financial information. This unadjusted financial information is nothing but the historical financial information. Then we need to check whether this historical financial information, the UFI, the unadjusted financial information, has it been audited or reviewed? If it has been audited or reviewed, whether a modified opinion or review conclusion has been expressed or an emphasis of matter paragraph has been issued. Right? So we need to check whether it has been audited or reviewed and any modification or EOM. And if it has not been audited or reviewed, then you need to understand. Right? Then that significant event or transaction, even for that you need to check if it has never been audited or reviewed. Again, you need to understand. Then you also need to check the applicable financial reporting framework of the event or transaction. Why? Because I told you otherwise consolidation, line by line addition not possible. And now that for the unadjusted information, they are using the FIFO method. And in this event or transaction, they are using weighted average. You cannot combine them. First, you have to do, I asked you one term, yes, which you had not told me that day, which was the harmonization of the accounting policies. There have to be the uniform accounting policies, right? It has to be the uniform. Right, accounting policies over there. Okay, right. So I hope it's a memory refresh for all of you. You remember that this is what we have discussed so far. Okay, right. So now today what we will do, we will complete with this 3420. Then we will go to chapter number 2, in which we will study one standard over there, essay 402. And then after 402, we will come to again the chapter number 11, wherein we have the SAE 3402. So 402 and then 3402, and then going to chapter number 9, which has the SRS 4400 and